Hey soldiers, the Inflation Reduction Act. This bill is going to do a lot of things. Reducing inflation is not one of those things. The bill's coming in so far at $700 billion. That's the cost of it. Guess who the government expects to pay for this? Well, if you want a spoiler alert, although we're going to talk about it, just go look in the mirror. Now, we're going to also discuss how a few people are going to be able to sidestep this taxation that's going to come with paying for this bill. And you can be one of those people. You don't have to be a millionaire or billionaire to take advantage of what's in the tax code.
You can do it!
All right. The Inflation Reduction Act. Now, this is kind of like the Build Back Better plan under a different name. Okay. And Joe Manchin, he seems to like this name better, the senator from West Virginia, because it seems like he's all for this. Now, the bill thus far is slated to spend $700 billion. That's what it's going to cost to get all of this wonderful stuff that's in this plan. Now, let's talk about very briefly here. Look at this chart. Who will pay the taxes in the Inflation Reduction Act? Because remember, the government doesn't have any money. The way that they generate money to pay for all of these wonderful ideas that they have is they get it from you. But again, you got to watch this video because we're going to talk about how you can remove a large portion of your money from that equation legally. It's in the tax code. They allow you to do it. And you might be saying, well, why if they're going to raise taxes, why do they allow people to sidestep this? And how is it that they allow people to legally not pay taxation on certain pots of money? Well, simple. Because they are writing the laws and they know that there has to be provisions in there for them to keep their money. Do you think Nancy Pelosi is going to let a bill cross her desk that is going to affect her and her husband negatively from an economic standpoint? Do you really believe that? It's never going to happen. The good thing about it is the same things that they use in that tax code to keep them from having to pay taxes, we can use the same provisions. Okay, so look at this chart. Who will pay the taxes in the Inflation Reduction Act? Now, you'll hear Bernie Sanders and Elizabeth Warren run around, and a lot of Democrats are going to be talking about how we're going to stick it to the millionaires and the billionaires. Now, as you can see from this chart, Daily Signal put this data together. If you're making $1 million or more, 19.8% of that population will be hit with taxes from this scheme. I mean, this bill, the Inflation Reduction Act. But if you take a look here, people making anywhere from $0 to $200,000, all of those folks, we call them the poor and middle class, they're going to be hit with about 60% of this bill. Okay, almost 60% of this bill is going to be laid at the feet of the middle class and the so-called poor, those beneath the poverty line. All right, so don't get excited about all this new climate crap that they have in here that's going to basically benefit companies that they have shares in. Don't get excited about that because you're not privy to that deal, but you certainly are going to pay for it. That is the insidious way that things work in our country. Okay, so if you look at a summary of the act, let's check this summary out. Total revenue raised, $739 billion. Now, when the government uses the term revenue, they're talking about money that's coming out of your pocket. Remember, the government doesn't produce anything, okay, anything at all. So there is no, food product that is a U.S. government food product. You wouldn't want it anyway if they had one. In fact, they do contract for the welfare cheese. When I was coming up and we were poor, we ate that. And it was like just a block of orange oil. Anyway, let's get into the meat of the matter here with regard to this particular bill and what it's supposed to do. Now, keep in mind that $80 billion from this bill, $700 billion in total, well, just over $700 billion in total, $80 billion of it is going to be directed to beefing up the world's most effective and aggressive debt collection agency, otherwise known as the IRS. A new Democrat spending package will expand the Internal Revenue Service in an attempt to raise government revenues and fight inflation. All right, so what that first sentence really means is this. We're coming after every dime. Okay, this is another reason why they want a central bank digital currency, because it'll make it easier. The IRS will just do your return for you at that point. They'll just take the money because it'll all be sitting over at the Federal Reserve if they get their way. In a bill that Democrats call the Inflation Reduction Act of 2022, the size of the IRS could substantially grow as part of a wider effort to ramp up taxpayer compliance, according to the bill's text that references a 2021 U.S. Department of the Treasury report. The bill will raise IRS spending by nearly $80 billion over the next 10 years. Now, if they're spending $80 billion over the course of the next 10 years, you can best believe they expect to get more than $80 billion back, okay? I know most of the government does not run efficiently, but the IRS is relentless. They want their money. Now, on the flip side, the IRS does have a boatload of benefits and advantages written into their tax code that you can take advantage of. We'll get to those in a minute. So this adds to the current IRS budget of $13.7 billion. So they're going up close to a $100 billion budget. This is getting up into the Pentagon type territory. They're going to hire thousands of new IRS agents, as well as expand the agency's operations, facilities, and services. Now, let's take a look at this chart again. We looked at it a moment ago. So, $80 billion, thousands of new agents. Who do you think they're going to be focused on? They're not going to be focused on the people that they know have the good sense to take advantage of the tax code, the law. They're not going after them because they already know that they know the tax code. They're coming after this group, okay, this group right here. And this 56% or so, or 57%, that's where your auditors and IRS agents are going to be focused. Trust me on that. Now, I say it'll increase inflation because it will. It's going to increase tax inflation. Remember, no one ever takes taxes into account when we're talking about inflation. Maryland just raised its gas tax, but no one ever says, oh yeah, the government is imposing its own inflation with its taxes. And remember, the rules that, remember that tax cut, remember the Trump tax cut? And remember how people, a lot of people didn't like it. They crowed and crowed about it, and they just hated it. And guess what? They're going to be able to breathe a sigh of relief come 2025 because those tax cuts will sunset. So congratulations, you'll be able to pay more taxes. And as we've seen, the taxes are going to be paid by the poor and the middle class, not the people who understand the tax code. Just continuing on for a second, the IRS will be given $45 billion to hire more auditors and lawyers to increase its ability to collect taxes and punish those who fail to pay what they owe. Now listen, guys, let's take a break here and address something very important. Pay the taxes you owe, okay? Because I know a lot of people have problems with income taxes, okay? But you need to fight that battle with your legislative representatives. Don't cheat the IRS. Don't do that. Because if you're trying to cheat them to, put more money in your pocket, think about what might happen if they come and audit you and then they start charging you all these fees. Or if you are a, known and pretty aggressive scofflaw at tax, not avoidance. Tax avoidance is legal. Evasion. If you are a serial tax evader, you can wind up in prison. And if you do, remember, several of your earning years are going to be taken away from you, okay? And you're going to be sitting in a cell eating, rot gut food and not being able to make any money. So do not cheat on your taxes. Be forthright. If you got a problem with paying taxes, take that battle to your local legislature. There are plenty of groups out there that lobby on behalf of a reduction in taxes. Get with them, okay? So they're going to hire, like I said, they're going to hire auditors. They're going to hire lawyers. They're also going to be spending over $25 billion to cover increasing operations expenses, including office rent and transportation costs. Transportation costs, what that mean? They'll come out to your house or your office, find you. Okay, they got $80 billion. They'll be able to get that car fare and get right out to you. All right, so that's what's going on. Now, the question on your mind may be, so how do I legally avoid taxation? Well, before we get into that, most Americans will feel tax pain from dim inflation bill despite Biden's past promises. The vast majority of Americans will pay more in taxes as a result of Democrats' inflation bill, despite President Biden's pledge not to raise taxes on those making under $400,000. Now, we just saw in the chart that they're going all the way down. If you made $20 last year, they want their money. And look, let's get serious. You remember, we've been talking about how the IRS changed the rule and said they want you, if you send money, $600 or more, well, if you get $600 or more in a year, $600 or more in a year, you need to declare that. Okay, so all these Zelle transactions, Cash App, all of that, they want that too. They made it clear. They want it. So the vast majority of Americans are going to be paying more taxes. Bill Gates ain't out there selling $300, to his buddy to cover the rent. That's not happening. Okay, this is focused on the poor and middle class. The Inflation Reduction Act, unveiled by Senator Joe Manchin, Democrat from West Virginia, and endorsed by Joe Biden, would increase tax revenue by $16 billion from Americans earning less than $200,000 a year. According to a nonpartisan analysis from the Joint Committee on Taxation, published last Friday, nearly every tax bracket would pay more in taxes, with those making below $10,000 per year seeing the largest uptick. Nowhere to run, nowhere to hide. They're coming for you with these taxes. So how do we avoid taxation legally? All right, there are ways to do it. Now, you can avoid taxation now by participating in a qualified plan like a 401k, traditional IRA, 403b. But be very careful. Understand this. The deal is, with a qualified plan, they allow you to reduce your taxable income by the amount of your contribution. There are limits. I want this video to be kind of evergreen, so you need to look up the limits for your year. So just to give you a rough example, if you made $100,000 and you contributed $5,000 to your qualified plan, then under most circumstances, the IRS is going to look at $95,000 of income to tax you on, not $100,000. That's in the here and now. Same works with it works in the same way for traditional IRA and other qualified plans. Now, when you start to pull that money out, 59.5 or later, okay, because if you pull it out before, they're going to hit you with taxes and penalties. But if you start at 59.5, you are then liable for the taxes on that money. Now, the key is, at that point, do you think taxes will be higher or lower? We already saw that in 2025, we got an automatic sunset of the Trump tax cuts. So unless something happens legislatively, those tax cuts are going to expire and people are going to be paying more taxes just automatically. Okay, it's already written into the legislation. They don't even have to meet again to have that happen. All right, so those plans have their merit, but just understand how they work with regard to taxes. Now, there are vehicles that will allow you to put money in after taxes today. So you've already been taxed on the money. And then at a point in the future, when you decide to get that money out, then since you've already been taxed on it, at the point in the future, it is tax-free. Now, do you think taxes are going to be higher or lower in the future? Okay, so this should based on your situation, tell you what percentage of money you need to put in qualified plans that reduce your taxation now, and what amount or percentage you need to put into plans that allow you to pull out money tax-free later, okay, and gives you the tax break later. You need to decide that for yourself. Now, what are some of these plans? A Roth IRA. A Roth IRA will actually allow you to put money in after taxes and then be able to access that money at some point in the future without taxation. The Roth IRA also allows the money inside to grow tax-free. Now, another vehicle that a lot of people don't understand, okay, is the permanent life insurance policy. A lot of people have a problem with the fact that there are fees associated with these types of vehicles, the permanent life insurance policies. Well, put your money in a bank and realize the loss between the interest they give you and inflation. And I'm certain that in most instances, that loss will be greater than the cost of insurance you pay to have your money grow tax-free, okay, in an insurance policy. This is our IRS code 72E. Allows your money in that policy to grow tax-free because you've already paid taxes on the money before you put it in there. Then IRS code 7702 allows you to access that money at any point, as long as you've accumulated some money. You got to have some money to, borrow. It allows you to borrow from yourself tax-free. You don't have to pay it back. However, if you don't, your death benefit is reduced by the amount that you took out. Okay. So 2 tax benefits right there. And the third is 101A, IRC, or Internal Revenue Code, IRS Code 101A, which allows you to pass the money on to your heirs, creating generational wealth, in most cases tax-free. Okay, so they're coming after your money. The IRS has already told you. Now, I don't feel sorry for you if you don't heed what they're saying. They are telling you, we are looking to boost the IRS's budget into the stratosphere. They're going to be up there with the Department of Defense, okay? Department of Defense, the one that spends billions on all kinds of satellites, aircraft carriers, jet fighters, okay? IRS is going up into, that rarefied air. So it would behoove you to get with your CPA, to get with your tax professional, maybe even your attorney, and start to figure out the tax code and how it can benefit you so that you can be one of those people that is in that arena of folk that you or your experts, or you and your experts, understand the tax code, and they are shielding you from everything that's going on here. These trillion-dollar bills that they keep throwing up, they don't even speak in terms of $1 billion. This thing will get to over $1 trillion. Trust me. All right, guys, as you know, the world is changing rapidly. When, not if, when the dollar loses its reserve currency status, you're going to still need to be on that road to financial independence. Watch this video. We're going to talk about what happens when the dollar loses its reserve currency status, how that looks, and what you need to do to successfully navigate that situation in a way that keeps you on the road to economic independence. I'll talk to you soon.